I use options for all trades taken. All trade setups that I look at, I use an option strategy based on the market condition or market cycle that we're in. But options can be confusing unless you do know which option strategy to use, when and how to use it correctly, and based on market conditions or the environment you're trading. So it's this kind of the strategy confusion I sometimes refer to as OSC. Now in this video, I'm going to take you through an option strategy process I use for trading options, picking the right option strategy, and entries and exits. So I'm Larry Gaines, and I'm the founder of PowerCycleTrading.com. And in this video, I'm going to step you through this Apple trade setup that we did through our alert service from the entry to the exit using what we call a calendar diagonal spread. So you can see Apple here. We had what we call this from swing high to the swing low. In October gives us our Fibonacci levels, and I like to use Fibonacci to base a trade price breakout and targets for profit take. Now based on this, we had our momentum indicators. This is what we call volatility squeeze. You can see these little dots here. That's showing a compression of the price action where it's kind of churning sideways. When I see this, then I look for momentum down below. Our momentum indicators measure direction based on momentum. So the probable direction, you see this histogram, the momentum is up above zero. So that's giving us probable direction up. And then I look for what I call my price trigger, which is a break of a Fibonacci level, a moving average, or a trend line break. So right here was the trend line break. So this was an alert trade sent out to my alert members. So we set this up on the 16th of November. And then with this trade alert sent out, I also sent out a text alert to what option strategy you use, entry, exits, and exit levels and adjustment levels. So you can see we got in here, perfect entry, broke hard to the upside. And then on this date here, the 18th, we made our first adjustment to make this trade a more potential profitable trade. And then we took the trade off, exited here on this big spike up. So let's walk through that trade setup and you'll see what it looks like. So this is what I call an alert trade sent out to our alert members. That's a subscription-based alert service that I run. And so this is Apple. Okay, so you can see on November the 16th right here, sent out this text. I sent to all the members, new Apple long trading at 151.30. Buy to open the diagonal Apple 23 December, 26 November, 150-155 call. So that's long the 23 December long call at 150 and then shorted against the 26 November call at 155. Did this for a debit cost of $4.25 or lower. Okay, so then once in this trade, we had a nice pop to the upside. So then on the 18th of November, 2 days later, sent out another text alert to the members saying to adjust it if you like. So it says update Apple trading now at 157.73. Hit through our profit target number 3, which was 155. Much bigger move than expected. Could though pin tomorrow, looking for potential move to 160 or higher. So said take some profit here, up about 169 per spread. But if wanting to, then make your long adjust it by closing the 26 November 155 short call out. You would do that at that point for a loss, and then sell to open the 26 November 160 call. So then you'd be into the adjusted trade long now the 23 December 150 and short against the 26th. And then we closed out the trade on the 22nd right here. Said update Apple trading at 163.40. If long this trade, look to close out trade. Had a great run to the upside, currently up $400. So let's take a look at what that trade ended up doing and how it worked. So right here, after the breakout, it broke to about 157.73 right in here. And at that point, we adjusted it by closing out the short call that we had originally on at 155 and replaced it with a short 160 call. And then 2 days later, we got the big spike here and closed it out. It was trading up here about 164, right around those highs right there at 164. So currently, I'll show you what the trade setup looks like and the profit that it currently has in it. So the original trade we set up right here on the 16th for this breakout, and that was doing a calendar diagonal. So we were long the 23 Dec 150 call and then sold short the 26 November 150 call against it at $418 per spread. Now that trade today on the 23rd, that's today, and it went out today on the close up at 638, up $219 basically, up about 52% return. But what we did here on this day, this 2 days later, on the 18th, we adjusted this trade to potentially make bigger profit, and that's where it is now. So now after the adjustment, we're long the 23 Dec 150 call, but we rolled up another $5 up. So we've got a $10 wide spread. Originally we had a $5 wide spread, and we adjusted this, and the cost then went up to $616 or $616. But you can see that went out at $1048 today, up $433 per spread. So increased the profit almost by 2x, 2 times the profit from the original trade by that adjustment, and currently still has potential to go higher. So if you were interested in this kind of trade or other option strategies, make sure to join us at powercycletrading.com. Good luck trading.